team shouldn't struggle to find great options for deferring capital gains taxes. Don't let your failure to plan become your plan to fail, especially in the Deferred Sales Trust. Maybe one of the best ways to exit your highly appreciated assets and defer the capital gains taxes so you can continue to grow your wealth. You are not in the wrong place. I am your host today. I'm Jessica Lanning, filling in for Brett Swarts. Each episode, we are joined by some of the leading wealth advisors, business and real estate experts, and leadership specialists to share ideas and tell us their deal stories and share their inspiration so that together we can make complex tax deferral strategies simple and passive income plans achievable. So our next guest has been working with clients on their tax preparation for over a decade, which I know sounds riveting to you. But what I love about him and what I've learned about him is that he is not just about getting taxes prepared and recording history. He is actually about helping clients plan for taxes, manage their business in a tax efficient way so that he becomes more of a business advisor than just a tax preparer. One of the few in his industry, which if you can find one of these, you've really made a great achievement. So please welcome Micah Fraim to the podcast. Welcome, Micah. It's good to have you here.
Hey, Jessica. Thanks for having me.
Just to get us started, please tell our listeners a little bit more about your story and what your current focus is these days.
Yeah, so we've been in practice about a decade now. Like most people, started out, you take on whatever business you can possibly get to come through the door just to survive. Always focused on small businesses. And after a couple of years, I always say I get bored very easily. And that's part of the reason that I'm big into crypto right now. But we deal with small business clients, very nice people. But after a couple of years, we'd be having the same conversation every year. These were people who were running their business, very happy just with a steady, normal income, normal self-employment. And there's absolutely nothing wrong with that, but it's not particularly dynamic, and you're dealing with the same situation, the same advice, the same taxes every year. So for the past, I don't know, 5 to 8 years or so, we've really focused on growth-centric businesses or individuals who just had very dynamic and rapidly changing situations, because that's where we could provide a lot of value. And also it's just more interesting for us because there's complex situations and challenges that we're trying to help them find a solution for. The past, I'd say 2-3 years, we've really focused on cryptocurrency a lot, partially because I like the space, partially because a lot of our clients are online businesses and a little more tech-centric anyway, so they were investing in it. And also because there's next to no guidance out there. It's kind of the Wild West right now, which if you're someone like me who likes to try to dig into a problem and figure it out, there's a lot of problems to dig into and figure out right now in the crypto world.
Absolutely. Just so our listeners can get to know you a little bit better, we at the Capital Gains Tax Solutions podcast believe that everybody lands on the planet with a gift, right? We all have superpowers that we provide to the planet. Talk to me about yours. What's your special gift? What's your superpower?
I think what we excel in as much as anything is being able to break down being able to speak about taxes and help people without getting into the jargon. Because that's one of the things that you mentioned at the outset. A lot of CPAs don't do any planning at all. If they do, we find that people come to us and say, I had no clue what my CPA was ever telling me, and they could not understand the concepts. And when they're not understanding what the CPA is saying, then there's a huge disconnect in the execution. You're losing a huge amount of value if you've just got someone who's speaking to you in terms that don't make sense. And I think some CPAs use that as a crutch for the fact that they really don't understand the topic very well. So they try to make it seem more complicated than it is, sort of to hide the fact that they don't really have as good of a mastery as they should. So that's one of the things that over the years that's the feedback we've gotten more than anything else, is that we're able to function as advisors for everyone's whole business, but I don't know, function more as humans than Rain Man-esque, trying to present ourselves as savants or something. We're able to just be real people in this space, which is oddly unusual sometimes.
Yeah, that's what I was hearing. What I was hearing was, I mean, I think all of us in the professions, I mean, I think we want to believe that we're able to take complex things and make them sound easy. But at the end of the day, if I can't get a 9-year-old to understand it, then why am I even running my mouth? Right. Some of these things, if you really understand them, can be, and explained very simply. And then, yeah, you create a human connection. And by the way, I don't really care about my tax return. What I care about is my business being successful, or my cryptocurrency investments being successful. Right. That's what I care about at the end of the day. So yeah, I hear you on that. So while we're talking about cryptocurrency, today's topic is using the crypto bear market for tax savings. There's been all kinds of bankruptcies this year in the various cryptocurrency exchanges, and let's talk about that. So using the crypto bear market for tax savings, what are some of the ideas that you're sharing with your clients?
Well, one of the biggest ones, and this is applicable that we're at the end of, it's applicable for a few reasons. One, we're at the end of the year. The market is absolutely in the toilet right now, so there's a lot of potential given just how much it's dropped. But we're talking a lot about tax loss harvesting because cryptocurrency specifically, at least for now, is not subject to the wash sale rules. I'm going to be surprised if that survives the 2023 tax year, which is another reason this is applicable, is that you might not be able to do this next year. But as it stands right now, you don't have to wait the 30 or 31 days to, from the time you sell an asset to repurchase it to be able to realize that loss. And the crypto market year to date, depending on what project you were involved in, you're down 50 to 99%, depending on exactly what you were investing in. So if you're someone who invested in Bitcoin in 2010, well, you're so highly appreciated, you can't do a whole lot. But if you're like most people, where we sort of follow the last year's hot trend and we get involved, we're really bad as to when we're timing entering a market. If you bought at the beginning of the year, you bought in 21 or even some point in 2020, you're very likely underwater on your investments right now. And if you bought 10 Bitcoin when they were $60,000, well, they're only worth $20,000 a piece now. So you've got an unrealized loss of $400,000. You can sell that Bitcoin, buy it back the same day, but you'll still realize that capital loss that you're either able to use against whatever capital gains you have, or just carry that forward indefinitely, which again, since this strategy may not even exist next year, or at the very least, it'll be the wash sale rules. You have to plan around them. That combined with just how bad the market is right now, taking advantage of some tax loss harvesting is just a really easy thing people can do for some pretty significant benefit.
So let's break that down for our listeners. I mean, I'm familiar, I'm a financial planner, so I'm familiar with the wash sale rules. Walk us through that though. What does that mean? Why is cryptocurrency not included in that? Get that really granular for our listeners.
So for regular stocks and securities, if you sell the asset, you're not able to purchase it back. And I really should know, it's either 30, I think it's greater than 30 days. I think it's 31 days that you have to wait before you buy it back, or you buy back a substantial equivalent, whatever the phrasing is. So the reason the IRS does that is they say, well, if you sold the stock and you buy it back the next day, you didn't really dispose of the asset. You didn't really sell it. You just did this to, on paper, look like you had a loss. So if you do that, if you sell it for a loss and buy it back within 30 days, they disallow that loss, and you're not able to take the deduction on your tax return. But at the moment, at least, and this is another thing that will likely change moving forward, cryptocurrency is not considered a security. It's just considered property for federal income tax purposes. And since it's not a security, it's not subject to those wash sale rules.
Thank you. I think that's really helpful. And then talk a little bit about carry forward losses, right? So people understand that too. Because look, there's not a lot of capital gains to get this year unless you sold real estate that you owned 20 years ago, that you bought 20 years ago, right? Like, where's the capital gains? Like, I have lots of conversations right now about tax loss harvesting. It works the best when you've got gains to offset the losses, right? You get tax-free benefit, but there's not a lot of capital gains out there this year. So talk about
Right.
carry forward losses.
And that's the conversation we'll have with some clients. They're like, look, I've got nothing to use against this. So there's two benefits. Capital losses, you're allowed to use up to $3,000 a year to offset against your ordinary income. So your W-2, business income, interest, dividends, stuff like that. So if you have $100,000 of capital losses and no gains, in the current year, you get to use $3,000, and then the remaining $97,000 will just carry forward indefinitely. And you're either using it $3,000 at a time, which it'll take you ages to get that benefit. But the big savings is that those losses are just waiting in the wings for when inevitably you are going to have some kind of a capital gain, either from, if you're a crypto investor, hopefully the market turns around and then you're making trades, but it's not in a bucket in and of itself just for crypto. You're able to use that against any other capital gains that you might have from real estate, stocks, whatever else you're selling.
Got it. And when you say that you think the rules are going to change next year, what's your prognostication on Congress?
I mean, and I'm amazed that this has stuck, this loophole hasn't been closed already, because it's existed for a while, and we've had, crypto is so volatile, we've had a fair number of these big swings over even the past 3 years. So there have been several proposals by members of Congress to close this loophole and make it to where the wash sale rules do apply to crypto. So far, they haven't gained enough traction to actually get passed. I don't think there's going to be a ton. I mean, this is pure speculation. I don't think there's going to be a whole lot of fighting against it once it's really on the table, because there's not a great basis for why they shouldn't be subject to wash sale rules. But it's really going to, I think it's going to, it's got to be more, it can't just be on its own. I think it's going to be as part of this greater regulation that is necessary in the space. And after this FTX failure, is almost inevitable that we're going to see a big wave of crypto regulation come in. And my guess is that, given the fact that they've already wanted to close this for a while and it just hasn't been important enough to be the focus, and we have this seemingly inevitable big wave of regulation coming across the board, whenever we do have any sort of semi-comprehensive crypto regulation, I would be surprised if that's not included.
Yeah, I agree. At some point, somebody's going to have to pay attention. Well, all depends on lobbying too, I reckon. So talk to me again. Our topic today is about this crypto bear market and using it for tax savings. What other ideas are you giving your clients?
So one of the things, and this is counterintuitive, and you can only do this with certain crypto projects, you have this level of control, but sort of counter to the tax loss harvesting, one of the things we're telling people to do is to accelerate their income for this year when it comes to their crypto. And not every project you have that level of control, but one of the examples we'll use is for certain node projects where that's effectively you've got mining income, but it's done on it's a proof of stake protocol is what it's called. But for some of those projects, you have control as to exactly when you're receiving that income. And since you have that control, that's also when it's taxable to you. So for some of those projects, we're telling people, hey, you might want to go ahead and, it's called minting your tokens. You might want to mint the tokens, get that income to hit for the current year. And there's a couple reasons for that. One is that you're claiming the income at a point when the tokens are worth much, much less than they were previously. So the amount of income you're claiming is less. The other reason that can be important is that when you mint those tokens, that's also when your holding period starts for capital gains purposes. So you're claiming the income at a lower amount. You've got it to where you're starting your to qualify for long-term capital gains. And we'll run through examples to where we say, okay, let's say that you minted them at $1, and then you can ultimately sell the tokens for exactly the same amount, but by splitting that allocation from the node income, which is ordinary income, to having more of it be capital gains, there can be some pretty significant savings. So that doesn't work for every project. It's a little bit of a niche thing depending on what you're involved in, but there are certain instances where it really does make sense because you're claiming the income at such a just market in the toilet time that when you run through the numbers of selling it 2 years from now, you can cut your tax bill in half in some instances on that same income.
Are you providing that kind of analysis for clients and helping them figure that out?
Oh yeah, I mean that's what we love, and one of the other reasons I'm involved in the crypto side is that there's very few people who do this, largely because Congress has and the IRS has issued next to no guidance on crypto. So instead of just being able to point to, well, here's this revenue ruling or here's the legislation, you're having to find something that's vaguely analogous within traditional investing or business or some other established area of tax law. So that because of that, not many people want to get involved in it. And there's probably, of the tax attorneys and CPAs I've seen in the space, I'm sure there's more, but I've seen like a dozen of us. So, and the ones who do market it, some of them you can tell are doing it sort of academically, like they're really good CPAs, but they've never used DeFi in their life. They've never actually traded a token. So it can be a little bit academic, and they miss some of the nuance. So because I enjoy this so much as just a blockchain enthusiast and investor, and because we're one of the few CPAs who have enough like tactile knowledge to do this, that's a big part of the analysis we try to do with clients.
Yeah, my experience in just working with clients on a financial planning side is that so many CPAs, I always make two distinctions. Some of them are working for the IRS and some of them are working for their clients. And I get all the compliance and regulations and the licensing. I mean, it's terrifying, right? To potentially lose your means for making money, right? If you get your license pulled. But you are, I think, maybe one of a dozen across the country. Like that wouldn't surprise me in the least. Yeah.
There's a tax attorney I've got a good relationship with. He brought a case to me a couple of years back, and this big firm ended up costing the client, it was about $2-ish million of income they got them to claim that they did not need to, without getting too much in. And I always remember the tax attorney, we amended the returns, got opinion letters, right? We got it all fixed, and I forget the exact amount, but it was like $700,000 or some just astounding amount of tax that this client actually paid that they didn't need to, that we got back. I bring that up just because I remember the tax attorney saying, it was this big firm. He said, I don't think they want to take any deductions at all, because then if you get audited, there's nothing to defend. If you've literally paid the IRS the most amount of money that you could possibly pay, there's nothing you need to argue about. And I understand, like you said, being conservative. I understand protecting our licenses, not doing things that are just, that there's not a justification for. But some CPAs are so conservative and risk averse to the point that it's like some degree of malpractice, like because they're doing such a disservice to the clients.
Yeah, I just feel like, they're not thinking like business people, right? I agree. They're thinking like, okay, how do I keep my behind out of a sling? And they're not always looking at how to serve their clients the best.
No, I could go off about CPAs just for hours and hours, but I really do think we will present ourselves as, and we'll charge as if we are business advisors, which we should be. But so many of us just end up being glorified data entry. So many CPAs, all they're really doing is transposing the numbers from one document into a tax software. And that's about the extent of the service they provide, which is really frustrating. I think is so diminishing to the profession.
Yeah, I completely agree. And I always tell clients that Doing taxes is as much of an art as a science, and the science of it you don't want to mess with, right? But the art of it, there's a way to play in the gray, is what I say, and I want my clients playing in the gray. I don't want them getting in trouble. I don't want them
Absolutely.
taking unreasonable risks, but go play in the gray.
Yeah.
Yeah.
100%.
Yeah. So, here at the Capital Gains Tax Solution, both at the podcast and the company itself, we specialize in helping clients defer capital gains taxes on the sale of their cryptocurrency. And so it's just interesting to hear you talk about, the people that got in last year, 3 years ago, there are opportunities for tax loss harvesting. Absolutely. Most of our clients are people who got in 7-10 years ago, right? They still have millions of dollars a gain. And they're just sitting there waiting, right? Because they know this is all coming back. They're absolutely convinced. What are you doing to help people with deferring capital gains taxes when they still do have gains?
Yeah. So there's a couple things you can do. One of the other things that is easy is, depending on the type of investor you are and the makeup of your portfolio, tax softwares and any of the tracking that you're using will default to FIFO. So there's good and bad to that. It's first in, first out. So you're more likely to qualify for long-term capital gains, but a lot of times you also have the lowest cost basis. Depending on the type of investor and the makeup of their portfolio, you can switch that to HIFO, which is highest in, first out. So you're less likely to get the long-term capital gains, but you are hitting it with the stuff that is just the highest cost basis, at least. The other thing is that big 1031 exchanges, with the very little guidance the IRS has actually issued, they very specifically said that crypto does not qualify for long-term capital gains. Not only did the Tax Cuts and Jobs Act in 2018 specify that you can only do 1031s for tangible assets, not intangible assets, the IRS also issued guidance for things 2017 and prior. Could you theoretically do it? And they said absolutely not. So because of that, since that obviously limits some of the benefits specific to capital gains, and again, it's got to be a high enough amount, but we'll talk to clients either about charitable remainder trust or deferred sales trust if there's enough of a gain to justify that.
Yeah, I agree with you. The fees have to make sense, right? The strategy needs to make sense. I'm always telling people, create a plan first, pick your tool second, right? To make that plan work. I see people jump all over all kinds of really fun products, and then they realize, oh, wait a minute, this doesn't work for me. But yeah, that's, because that's what we're doing here at the Deferred Sales Trust, is helping people just continue to defer those capital gains, capitalize on the wealth that they've created to go create more wealth, right? I mean, I think you and I are both in that business.
Yeah, absolutely. And I mean, that's such a valuable tool, just especially depending on how much they're trying to offload. Because if all of a sudden you're trying to offload 500,000, $1 million, and you're doing that all at once, it's pretty, this very well, the way we've got progressive income tax rates, being able to spread that hit out is the amount of not only a time value of money thing, but just the absolute tax savings are just massive.
Yeah, it's huge. All right. So if people want to get a hold of you, please tell our listeners how to get a hold of you.
Yeah. So if they're crypto related investors, they can go to cryptotaxcpa.com. If you're just a regular investor, you can go to our main website, which is framecpa.com. And again, if you are a crypto investor, we do have a book that the digital version of it's free on Amazon right now called Decrypting Crypto Taxes. And we have it structured where basically every chapter is a frequently asked question we have of, how is this taxed? What do I do when this happens? So again, since there's very little guidance out there, it at least will give you a reasonably surface level answer for what sort of bucket that income is going to fall into.
Excellent. Thank you. All right. You ready for the lightning round of questions?
Yeah, sure.
All right. What favorite book that you've read or gifted in the past year are you continuing to gift? What's your favorite book?
Never Split the Difference. I say that every time, but the Chris Voss book on He calls it negotiation, which I guess it is, but it's such an amazing viewpoint of what negotiation is and this like collaborative approach to problem solving. I love it.
Yeah, I liked it too, and totally worth watching his YouTube clips as well, I think.
Yeah. Yeah.
Favorite leadership quote or theme that you strive to live by?
Oh geez Louise. um there's years ago, there was a client of ours who hired this really expensive business coach, like $40,000 a year business coach, and he had all kinds of advice, but the quote I always remember, it was an expletive filled version of no jerks. And he would talk about how, I don't care how much the client is paying you. He said, no jerks. They're going to cost you. They're going to cost you your time, your sanity, and ultimately they'll cost you money. We apply that to clients, but I kind of apply that to the way that I live my life. The employees we have, the people you engage with is no jerks, because that sort of friction ultimately costs you your sanity, and just as a business owner, it ultimately does cost you money.
Yeah, amen. I'd imagine you could go back in time. What would you tell your 25-year-old self?
I feel like one of the like old fogies who's just like, I mean, this is cliche, but so much of the stuff you're worried about does not matter. I think about the things that in business and personal life, just across the board, the number of things you just lost sleep over, had to go to the chiropractor, get a massage because it threw my back out. So many of the things that we focus on really, really do not matter. And I think when we can recognize that, it takes away so much stress from everything we deal with.
What are you most curious about right now?
I'd love to look through a crystal ball to know what the next couple of years of the economy is going to look like, because there's been, I've been thinking we were heading for a recession and a slowdown for 7 years, and I was wrong every single year. So the market just kept going up and up. But there are so many things economically, politically, geopolitically across the board where it seems like hopefully everything will be fine, but it seems like if one thread gets pulled too much, it could have this huge cascading thing where I'd be curious if we're going to head for a really, really rough time, or if we'll continue to be okay. But that's what I think about a whole lot right now.
You've had a lot of great success in your career. What is the one habit that you try to practice daily or weekly, which keeps you centered in your values and keep you moving towards your new goals?
That's a really good question. I think to some extent, I think having to where you're interacting with a diverse group of people, not only like personally, but your employees and the clients we deal with, I think having that can just really help you just have a more balanced, rounded view of the world, and not lose sight, not end up in this echo chamber where you start to lose sight of human decency. And just I think living in the world we do, especially with social media, you can have it to where you can ease the way the algorithm curates everything you see. If you're not really careful, you can end up in this like one extreme or this one bubble, but think that is representative of the world and the majority of people, which I think can be, if not dangerous, at the very least really diminishing to who you can be.
Well, thank you so much for being on the show. And I want to
Thanks for
encourage you to
having me.
keep using,
This was great.
yeah, good. And I want to encourage you to keep using your gifts or strengths to be a blessing and a help to others, whether that's educating clients, clarity, talking like a human being and being able to explain things to like the people who are a 9-year-old. And I also just really appreciate that you're willing to take some risk in the cryptocurrency world tax-wise and really get to know that stuff and provide good advice for your clients and play in the gray. That's good stuff. All right, so let's repeat this for our listeners. For those who want to get in touch with you, what's the best place for people to find you?
CryptoTaxCPA.com or FraimCPA.com.
And Fraim is FRAIM CPA.com. So that wraps up the show. I want to thank you, the listener, for listening to another episode of the Capital Gains Tax Solutions podcast. We believe that high net worth individuals and their professional teams shouldn't struggle to find great options for deferring capital gains taxes. Don't let your failure to plan become your plan to fail, especially when the Deferred Sales Trust may be one of the best ways to exit your highly appreciated assets and defer the capital gains taxes so you can continue to grow your wealth. Please rate, review, and subscribe, and we'll see you again next time. Thank you. Good to see you.